Hi, this is P R Sundar. Last week I started a new series where I said I will be analyzing the stocks. The first stock analysis I did was Reliance Industries. I always say we do what we teach and we teach what we do. So, to show the people that what I do is what I teach, and I decided to buy Reliance Industries shares. But in fact, when I analyzed last week, the Reliance Industries has shot up so much because there were so many good news, market shot up, and I said maybe you can wait for correction. So, that correction has come in the last week and it has fell almost 200 rupees in the last 1 week. So, therefore, I decided to buy 1010 shares, but I bought it in future market. I did not buy it in the cash market, and I bought at 1422 rupees 50 paise, and this one was bought on 15th May at 11:28 am. So, when I posted this in Twitter, somebody said you are buying for a long term because your analysis is for long term for 2 to 3 years. But why are you buying it in future market? Logically, you should buy it in the cash market. The first thing is that why people say I should buy it in the cash market? Because in future market, the Reliance Industries share will always be trading with a slight premium. Say for example, on Friday, Reliance Future was trading at 5 rupees premium to the spot price. So, if you are buying for a long term, why you have to pay 5 rupees more? So, that is first question. Second question, if you buy it in future, you have to sell it by the end of this month. Again, you have to buy it in the next month. Assuming that you are doing for this 1 year, so 12 times you have to buy, you have to sell it, and you have to buy again. Normally, long-term investors, they just want to buy once and they leave it. But if you do it in future, you have to do 12 times. It is not only that you have to do 12 times, every time you have to pay 5 rupees premium. So, with all these disadvantages, why am I buying it in future? So, our topic today is cash versus futures. I prefer to do it in futures even for my investment. First, we talk about the cash market. I take approximate figures. Let us say Reliance Industries lot size is 500, the actual lot size is 505. They have adjusted due to the rights issue. Assume that the price is around 1500. So, 500 into 1500, the 7,50,000 rupees you have to pay from your pocket. So, let us say somebody is buying in cash market 500 shares, he pays 7,50,000, buy 500 shares, the shares come to his demat account, that's it, he forget for next 2 years. But what I do, the same 7.5 lakh rupees, I go and put it in bank FD or Bharat bond or any other debt instrument where I get at least 7% return. Bharat bond is giving about 7.5-7.6% return. I get at least 50,000 rupees as the interest. Then this Bharat bond is given to exchange as a collateral. From the collateral limit that we get, and I go long in future in Reliance Industry. Now, I may be losing 5 rupees every month. 5 rupees translates into 2,500 rupees per month. For 12 months, I may be losing 12 times 2,500. I may be losing about 30,000 rupees if I go long in future. But on the other side, I get more than 50,000 rupees as the interest, which you do not get. So, there is a straight saving of about 20,000 rupees every month for me. Of course, it may not be exactly 20,000 because when you buy, you pay STT, stamp duty, everything only one time, and I pay 12 times. So, that cost may also add up. Again, in future market, the premium may not be 5 rupees all the time. Sometime it can be 2 rupees, 3 rupees, sometime it can be 7 rupee, 8 rupee. But even if you factor in all these things, and still I will be saving at least 10,000 to 15,000 per annum, which you don't get a chance. I am giving you a simple calculation here. Reliance cash 1453, future 1458. You go long in future, you pay 5 rupees more. 5 rupees is the loss. Per lot is about 2500 and loss per year 30,000. Investment is 7.5 lakh. If I keep 7.5 lakh in FD, I get more than 50,000 as the interest, and you out of that 7.5 lakh collateral limit, I use 2 lakh as the margin money to take future long position. So the saving is about 20,000. This is only half of the story. I'll tell you the remaining half of the story. Now, people outside the stock market, they always think stock market is a gambling, and I tell you, definitely stock market is not gambling. Assuming that stock market is banned by saying it is gambling, how entrepreneurs can raise the money, how can expand the business, how can they create employment opportunities and so on. But at the same time, some people have made it as a gambling. I always say for fun, people can gamble based on anything. Let us say my neighboring girl, she is going to wear a red saree or blue saree. Two people are betting. Can we say because the people are gambling, the girl should not wear saree? That's not the right thing. And people wear dresses to cover that, but people can make it as a gambling also. So what is wrong? The wrong is not the lady wearing the saree. The wrong is the people's mentality of making gambling out of everything. So the same way, people can make even stock market also gambling. I will give you another example. If you have a matchbox, you are burning a house or lighting up a candle. So it is with whom? Whose mistake? If you are a responsible person, you are going to light up the candle. You are an irresponsible person, you are going to make a fire in a house. So the mistake is not with the matchstick, the mistake is with you. So we are not going to teach those people to come to stock market. So if they think it is gambling, let them be away. After coming to stock market, I know many people who are dealing only in cash market, but they think that futures and options is a gambling. You ask them why? Sir, in cash market, you pay the full money and then you don't have to worry, market can go up or down. Ultimately, over a longer period of time, the market will go up, I will make money. But in future market, you are paying only 10%, 20% as the margin money. So if the market goes up by 1%, you make 5% profit. Market goes down by 1%, you lose 5%. So it is a leverage trade. So because of the leverage, so it is a gambling. But again, if you have 100 rupees, in cash market you go and buy the share for 100 rupees. But in future market, the same thing can be bought for 20 rupees. Why do you assume that people who are buying this only have 20 rupees? You can keep 100 rupees with you, still you can buy only for 20 rupees in futures market. In that case, it is not leverage. As I explained in the first part, you are making 10 to 20,000 rupees savings. 10 to 20,000 rupees saving is a big saving. If you are talking about one lot, but there are people who do 100 lots, 200 lots, just imagine 100 times 10,000, 20,000, how much money they are saving. So many people in the stock market, they think that futures and options market are high risk and it's a leverage play, it's a gambling, and it is not true. All these instruments were brought for the purpose of hedging. So if you know how to make use of this instrument for hedging, definitely it is not a gambling. Now that is going to be my second part. I analyzed the Reliance Industries shares. I took a bullish view for a longer period of time, for 2 to 3 years, and I bought it also. But what next? What normally happens for the people who are investors, they just buy the shares, they forget it. But I will not go like that. I am always worried if the market falls further, what to do. So therefore, what I do, I just sell one call option. So in case market goes down, that call option money will be free for me. So my damage will be less. But in case market goes up, I know how to manage that call option. I can come out without a loss. Once again, explaining that is going to be very, very difficult. It's a very, very long process. Even if I do not know any adjustments, okay, I can simply sell the Reliance Industries shares. Even for this position which I have taken, I sold a call option. In case if the Reliance Industries shoots up, I will be able to come out with a 1 lakh rupees profit. If I am making 1 lakh rupees per month in 1 month, what is wrong if I exit the Reliance Industries? And sooner or later, one more correction will come and we can buy it. Even assuming that no correction is coming, I can go for a cash secured put. If you don't know what is cash secured put, you can watch it here. Whenever I go long in future, I always sell one call option. This is zero the margin calculator. I am calculating the margin money for Reliance and I am buying. The margin money is about 2 lakh rupees. Now, if I want to sell one call option, Reliance Industries calls, let us say I want to sell 1500 call option. I want to sell it. Now, the margin money is becoming around 2.5 lakhs. So, if I go long in future, I pay 2 lakhs. When I sell one call option, I am paying about 2.5 lakh rupees, which means that I have to pay only 50,000 rupees for selling a call option. Again, that 50,000 rupees is also adjusted against the collateral. And none of this is paid from our pocket. This is adjusted from the collateral. But let us say you have bought 500 shares in the cash market and you also want to do the hedging. You want to sell call option. Then what you need to do, you need to take out these Reliance Futures because you don't have futures. You have it in the cash market. But look here, now the margin is almost 1.75 lakh rupees, which means if I take a position in future, if I want to do the hedging, if I sell call option, I have to pay only 50,000 from my pocket, that too from the collateral. In your case, after spending 7.5 lakh rupees, if you want to do the hedging, you have to pay 1.75 lakh rupees. Of course, you also can pay through the collateral. The shares that you are buying for 7.5 lakh rupees, you can pledge it, you can give it as a collateral, you can get the limit, you can use that limit for selling the call option, but you still have to pay 1.75 lakh. So that means you are paying almost 1.25 lakh rupees more. I am paying 1.25 lakh rupees less. So I can use that additional 1.25 lakh rupees margin for doing some other trade where I can make some little bit money. So whichever way you look at it, going long in future is far better than buying it in the cash market. But there are some negative things. Number one, you can buy it in future instead of buying it in cash market only if you intend to buy 500 shares. That means you should have a 7.5 lakh rupees capital. People who have capital of 10,000, 20,000, they want to buy 5 shares or 10 shares, they cannot do it in future market. Second thing, you buy it in futures market, every month you have to remember to do the rollover. Rollover means you buy it in May month, you sell at the end of May and buy it in June. 12 times you have to do it. So you have to be a little bit active. Whereas investor can be very, very passive. He can just invest and he can forget. And third thing is that once you sell a call option, you have to keep monitoring. So these are the negative things. So generally speaking, for the people with a large capital, it makes sense to take positions in futures rather than buying it in cash market. Earlier, there was one big advantage for people who are buying it in the cash market. Their long-term capital gain tax was 0. But now, capital gain tax is 15% for short-term, 10% for long-term, and without any other adjustments. Whereas, if you do it in futures, it is considered as a business income. So it will be taxed according to your tax slab. It can be 0% or 5% or 10% or 20% or 30%. But again, futures and options is considered as a business income. So if you have any business expenses, you can deduct those expenses. So I will do another video from the taxation point of view. So as of now, my simple decision is that if you have a large capital, it is better to take position in futures market rather than cash market. So I hope I have explained things very clearly. Thank you for watching.